If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
All right. Good morning, guys. Welcome back to another live stream. Wednesdays, we are work from home at A1 Trading. A little cozy, nice little perk of working at A1. I know I enjoy my work from home days. It's one less day I have to do this hair. You guys know I spend about 45 minutes each morning on my hair. I'm totally kidding, but it's nice to have the midweek. What I do usually on Wednesdays is I go work out and then I shower and then I get on stream. And my timing of that is not great because usually I do actually try and, get the hair done a little bit. It takes me 5 minutes, but today I was a little bit more rushed. I hope everybody's doing well. We've got some interesting stuff happening in currency world that I want to talk about. Euro dollar down again today. Did you guys see this? Little bit of a move lower for the euro. And I'm just curious really quick, is this euro specific or is it dollar related? Seems like it's dollar related. Take a look, Australian dollar versus the US dollar moving lower here. We also have dollar CAD moving higher. Oh man, this is getting juicy. The dollar to me looks like it's reversing. I've been saying that in the videos. I think it is. I think it's happening. I think we are officially seeing the US dollar do a bit of a reversal dance here. Euro dollar looks top heavy to me. Pound dollar looks top heavy to me. In fact, I would probably sell this one on a bounce. Dollar CAD looks bullish. I like dollar CAD quite a bit. And so what I'm looking for in this one, this kind of move, I'm probably going to take a stab at getting long dollar CAD. I like long dollar CAD and I like short British pound versus the dollar. But let me hold my horses for just a second. That is an expression. I don't know if it's an expression all over the world, but here in the South. And let me think a little bit about what's coming here today. So today we have GDP statistics coming out, advanced GDP, which is usually the most volatile of the GDP figures for the US. Hold on one second, guys. I got to open the door for my cat. Bye. All right. So advanced GDP stats come out this morning. Last time around, we did get negative GDP. We are expected in Q2. Is it Q2 or Q3? I'm getting confused really quick. Hold on. Let's see. We can go look at this. I don't know why this always tricks me up. Okay, so for Q3, we're expecting some nice positive growth overall in the US in terms of GDP statistics. The expected number for advanced GDP is 2.5% quarter over quarter. That is a nice, strong bounce back in GDP. That is what is expected. So we'll see what comes out of this. But of course, with GDP statistics, right? It all is about, is the dollar going to see outsized growth or not? I'm sorry, is the dollar going to move up on outsized growth in the US economy or not? That's the question. Show the cat, please. I would if she was still in here, but she has left the building, and you guys know how cats are. They're in charge, not me. She's in control. Euro pound's also moving lower. If you guys have been following me on the currency side recently, I have been in a short position in the euro pound for a couple months with very small size, and I continue to scale into this trade. Although it's looking like I'm going to be able to get out of this trade for a controlled loss. If we can get another wave lower, I'm going to probably take, this might even be a small winner when it's all said and done. But I've taken a small short over here. I took a small short over here and over here. So I have 3 short positions. If the euro pound continues to move lower in the short run, I'm going to look to exit the trade. I am in damage control mode on this short position. It's a very small drawdown for me. It's about less than 1%. Actually, at this point, it's like 0.75% drawdown in my account between these 3 trades. So, I wasn't looking to add more shorts. Had I, it would have been a brilliant play with hindsight in my favor. Shoulda, coulda, woulda. But I didn't take a 4th short. I just have my 3 shorts, really small size. And I am looking for an opportunity to get out of this trade with a controlled loss. Same story with CAD Swiss. Let me just check in on my CAD Swiss idea. I don't have it on this list. CAD CHF. So let's just take a look. I've been doing a lot of currency trading recently. With the indices sitting at all-time highs and gold going choppy, currencies have come back into play for me big time. So CAD Swiss, I'm also looking for some sort of extension higher. Any sort of extension higher, I'm going to cut the trade, take a loss on it. I know this is not your traditional Forex trading. Most Forex trading that people are familiar with is 5-minute charts, British pound against the Japanese yen, trading zone to zone, scalping, right? That's what people who are used to Forex YouTube mostly see. That's not what we do on this channel. And I am probably the most boring Forex trader, but possibly one of the more consistent ones that is on YouTube. I use a dollar cost averaging approach. It is small size, scaling in, scaling out, low stress, conservative trading, and it works. It works great. It's not going to make you a millionaire very quickly. It's not going to, you can make money and grow accounts using this style of trading, but it's not a quick way to do it. It's a slow way. And I like the slow ways, right? I've always been on my channel an advocate for taking the slow and steady approach, whether it's Forex, indices, commodities, whatever you're trading, right? Let's talk oil, because oil I do have a trade on that's a lot more interesting than my currency trades. I have a trailed stop. Let me just fix my camera just a little bit here. There we go. So on oil, I have a little bit of a different trading style. When it comes to indices, commodities, and I'm trying to think there's something else, and maybe like cryptocurrency, for example, I use a trend following approach where I trail stop losses and I'm looking for momentum, and it's like pure trend following. So I liked the idea fundamentally of getting involved with oil on a pullback, right? So oil pulls back into support, and I ended up getting long over here, and the market went sideways for a little bit. It's now popping higher. A little bit of uncertainty between the US and Russia with what's happening in Ukraine. So that story has flared up a little bit, and oil popped on that just a bit. And so I have this long position. I can't lose money on it now because I've trailed my stop loss into profit. And so I've got a situation in which, okay, price came down to my level. I bought in, and oil is still, to my knowledge, it's still a top setup within the EdgeFinder. In fact, it's getting a stronger score today than it did yesterday. Oil getting a +9, very bullish reading within the EdgeFinder. And so I took this trade, and I'm glad that I'm in it, because now at this point, I am in a situation in which I can't lose money on the trade. I can't lose money on the trade. It's just a matter of whether or not this is going to continue to move in my favor, and which would allow me to take my stop loss and move it further into profit. Or is this going to be kind of a pop and drop on oil? And if so, I'll take my profits and move on, right? So that's where we're at with oil. That is the update on it. I'm still bullish. I think it has upside. I like the breakout here yesterday. Really strong candle on the daily. Take a look at the 4-hour chart. Love these moves, right? Beautiful break through resistance with confidence on this 4-hour candle. Look at this intraday getting a little bit of a push off this area. Oil looks good. I like the trade. In fact, if we take out these highs and shoot through them, this is looking like a pretty good candidate for a possible place to trail stops further into profit. Quick look at gold here this morning. We did get ADP numbers, which came in better than expected, I believe. Yes. Oh, wow. Look at this. So ADP statistics came in strong this morning. Yesterday's JOLTS job openings were a little bit soft. However, take a look at this. ADP non-farm employment change statistics came in at 104K jobs added in the private payroll sector compared to the forecasted 77,000. Strong. That's good, right? So we got some strong US jobs data this morning. Take a look here also at the revisions. What we can see here is that they revised the previous month's reported numbers up from minus 33K to minus 23K. So what this tells me right here is we had some dollar strong statistics that came out this morning. And take a look at the dollar. Look at this, guys. Like I said, I think we are in slow motion. We are breaking out on the dollar. That is my opinion. I could be wrong about this, but I am looking for dollar longs at this time. Granted, my catalyst price action wise, I'd like to see us break through this level and do any kind of pullback. But there's specific currencies that look better than others. And that is why, that's the joys of being a currency trader. You can look for things like dollar CAD. Like this is a clean setup for me. Is it a guaranteed move that we're going to see higher prices on the dollar CAD? Never. We never know for certain what's going to happen in the currency world or any market. No market. Markets are unpredictable by their very nature because the world is unpredictable, right? Things can change all of a sudden. But all things considered, U.S. economy seems to be doing decently well. Also, guys, I'm switching over to our all markets view because we do have advanced GDP statistics dropping in the next 20 seconds. This is likely to move dollar crosses, commodities, indices. Everything should move depending on what the statistics look like. So stay tuned. Breaking news coming in. All right, got S&P indices over here, gold over here, dollar here. Let's see what GDP statistics do this morning. Initially, we have a little bit of strength for the US dollar. Indices just reversed course, moving higher now. Let's take a look at not a huge move. Dollar is stronger. That suggests that GDP stats were good. Oh, and were they good? Look at this, guys. The bounce back is real in advanced GDP stats. Expected 2.5%. We got 3%. So you're telling me the U.S. economy is gangbusters right now? So the U.S. economy is doing just fine. That's what that tells me. All right, look at that. Dollar index moving higher on this. Indices flat because, again, this kind of pushes back the probabilities of rate cuts. Remember that rate cuts are often more encouraging or more advised when the economy looks a little soft. But with 3% GDP numbers, that's a strong growing economy. 3%, you get into the threes, that's looking real hot. Compared to places like Europe or the UK or these other places that have sleepy to no growth, that is super dollar bullish. It is also not great for gold, right? So gold, let's see how gold is reacting here really quick. Dollar index, like I said, looks like it just wants to pop through here. Let's see, gold continues to stay muted, range bound, the shorts are holding their losses, holding their gains for the last few days. No rate cuts. Yeah, that would hurt the story for rate cuts. However, I've said this many times on my own channel. Okay, first of all, this should be decently good for oil. Strong GDP stats demand more oil. Yeah, to me, this is risk on. Now, again, some people would say, oh, well, the Russell or certain tech stocks, they're not going to like this because, we're not going to get rate cuts. But I've said this so many times on my channel. I'm not a stock bull because I want rate cuts. I think that's a dangerous game to play because it's kind of like I really want my medicine. Like that's like what you're saying. You're saying like I really want the US economy to be hurting right now so that I can have some medicine. That's not what anybody says. We want healthy economy because then companies can just kill it on their earnings. 3% GDP stats support strong earnings growth for companies in America. It supports employment staying strong. GDP coming in at 3% is a huge win for the dollar. It's a huge win for the US economy. That's awesome. It's great news. And so we put that into combination with the rest of the story, which was already a positive one for the NASDAQ, for Russell, for oil, for SPX. All of these things, Bitcoin as well, these things are all going to be positively impacted economic score-wise by better GDP stats. That's how our software works. Our software automates that component, right? So when GDP numbers come out and you hear me like, oh yeah, GDP numbers are great. The cool thing is that our software will automatically go pick up that data and say, oh, how does this factor for SPX, NAS? How does it impact gold? How does it impact the dollar? How does it impact Bitcoin? And it will automatically add that into our scoring mechanism. And this is why, I say this often, but like when I go on vacation, for example, and I'm a little out of the loop with market news, I still only need the EdgeFinder. Like I could trade, essentially at this point, I could watch the EdgeFinder only and never turn on the news again and still trade the same way that I trade now. Because the EdgeFinder is just carving out the data, giving me the black and white in terms of how does this look, bullish, bearish. And then if you just gave me that plus, a technical chart, that's all I need to trade, which is the cool thing is last year I was in Greece for my sister's wedding. And while I was there, I was really out of the loop. I was a groomsman, so I was very busy, but still trading. I even when I'm on vacation, I have the laptop with me, and I placed several trades during that week. I actually had an amazing silver trade during that time, and all I was doing was just watching the EdgeFinder each morning, looking for setups. If there was nothing, close the laptop. If there was something, take the trade. If I was in something, manage the trade. 30 minutes or less per day. And I had some of the best trading, like in terms of performance, it was like better than usual, which I know there's a little bit of variance. I might've just had, a fortunate trade at that time, but it was like, you don't need to overcomplicate it. Economic data can be scary, but use tools to automate that process. We're living in 2025, with the proper tools, we can scan markets, we can get a general idea. And us as traders, we can align technical analysis with fundamentals using the right tools. If you don't have a copy of the EdgeFinder, our sale is officially ending. We are doing 45% off the EdgeFinder. And let me just give you a fair warning. If you're somebody who has been thinking about getting a copy of the EdgeFinder, but you don't have one yet, do not wait. The EdgeFinder 45% off sale is ending, and it is the biggest discount that we do all year long. We are also offering for people who are like, I really want the tool, but even the 45%, it's not quite in my budget right now. Don't miss this opportunity. We are offering to split it up for people who need to into 3 payments. If that's you, if you're like, oh, I could do it in 3 monthly payments, send us a message, and one of our wonderful support team members here at A1 Trading can help you out with getting a copy of the EdgeFinder and splitting it into 3. So like I said, if you're somebody who watches all the time and you're like, I love that EdgeFinder, but I just can't do it today, just send us a message. Let us know that you are interested in exploring what that offer is for us right now, and we'll try and make it work for you. But again, every time I say this, the reason I'm giving you a strong last call on this is because every time we end a big sale, people later on are like, hey, can I get that discount price? And we only run it during certain parts of the year. So don't miss it. If you don't have it and you're thinking about getting it, get it. It's a game changer. Vampire Doggo, thank you very much for that. I appreciate it. EdgeFinder made trading simple and easy. 4-hour time frame, so good. My life is simple now. Hey, you're selling it to me, man. I'm going to go buy the EdgeFinder. Worth the money for the combination of FA, fundamental analysis, SA, sentiment analysis, and technical analysis has changed the game for me. Awesome. Thank you, guys. I appreciate the testimonies. Again, I'm so passionate about what we sell because I genuinely believe it is worth every single penny. Personally, well, not personally, but business-wise, we invest hundreds of thousands of dollars into building the tool every year. We're investing into building better and bigger than last year tools every single year in the EdgeFinder, and it's only going to get better from here. So don't miss it. Before the price hikes, take advantage of the discount. How much is the discount price? Send us a message. We can map it out for you. Like I said, click the link. We'll drop it one more time here in the chat. Click the link. Chat with our support team, ask them about the current offers that we're doing right now, and they can map it out for you better than I can over a live stream. Best investment I got since the launch of the EdgeFinder. Thank you, guys. I appreciate it. I appreciate it. For those in the chat, I mean, look, the EdgeFinder, it is worth the hype because it's not, I'm not going to ever come on YouTube or live streams and sell it to you as if it's some sort of black box magic supercomputer algorithm that's going to make you a millionaire. That's never what we're going to do on this channel. But if you're looking, if you appreciate fundamental analysis and its complexities, but recognize that would be useful to have that better locked in your trading, then you might actually be a good candidate for the EdgeFinder. If you don't see that, if you're like, I don't really care for fundamentals or sentiment analysis, then don't buy the EdgeFinder. But if you're somebody who's like, fundamentals, I get it now. They make sense. They're strong. They're really important. But I lack the tools to properly get a bird's eye view on what's happening in the fundamental landscape, the EdgeFinder is a wonderful tool. It's worth every penny. All right, there's my rant. Don't miss it. It's ending. NASDAQ is pushing back a little bit here. Not a big move in either direction for NAS this morning. We also are in the midst here today, guys, of earnings season. So if you're trading the indices right now, heads up, be careful, because we do have some stuff happening after the bell. You do have Apple earnings today. So Apple reporting their earnings. Okay, I'm wrong about that. It is Thursday. What do we have? We have today something. I care a lot about Robinhood, which is dual purpose caring here. From my stock trading portfolio, I do care about Robinhood because I own a good sized position in Robinhood, but I also care about Robinhood stock earnings because this is a super big indicator of the consumer, right? Specifically, the retail trading world loves Robinhood. They do all their, stock and options buying and selling on Robinhood. I mean, I grew up on a Robinhood account. That was the first stock account that I had. And so Robinhood reports after the bell. The stock has had a massive run up. The reason I'm bringing this up on this channel is because Robinhood, if it has really, disappointing earnings, that could suggest that perhaps this market rally is getting a little bit overdone, right? If the consumer is pulling back on, buying hot stocks. But if they come out and they smash expectations and we get this huge pop in the stock, that could suggest that we are going into sort of a euphoric phase in markets. I want to talk just briefly about that. If I go take a look at some sentiment here, if I take a look at market sentiment and I look at the put to call ratio, for example, put to call ratio, interestingly, let me just look at like NASDAQ, for example. NASDAQ sort of neutral, Russell sort of neutral. What else? US oil. Well, let me stay on the indices for just a second. So if I'm looking at like Dow Jones, we can see the Dow Jones, there's some high call demand happening right now, which I think is kind of interesting. If we take a look at SPX, SPX is actually showing the opposite. There's a lot of put buying, which is bearish bets in the market. So crowd sentiment seems a little bit more poised to be negative or cautious. But let's take a look. We'll get the latest AAII Investor Sentiment Survey tonight. Right now, what we're looking at is 34% of investors, traders, think that the stock market is going to go lower. 37% of traders think that the stock market is going to higher. This is very neutral. So this does not suggest that the market is super euphoric or super terrified. It suggests somewhere in the middle. So that's telling me that when I look at, the NASDAQ, is this thing technically a little bit stretched? I think so. I think it's a little due for a pullback, but timing that's going to be so hard, and it always is. VIX is down to 15.79. We have volatility down in the dumps here. I would warn that typically volatility is a very mean reverting thing in markets. So typically when you get low volatility periods, it proceeds to go into high volatility environments and vice versa. You get these pops in the VIX, and we haven't had one in a while. So what this coincides with likely is volatility in many ways. And where I see that potentially curling up, guys, is in the dollar. The dollar popping could unwind a little bit of this, this and oil prices, which, by the way, back in the positive, oil's making a move here. Oil prices rising. If this were to cause a shock, if we were to jump up in oil prices, if we were to jump up in the dollar, if rate cuts were thrown out till the end of the year, those things have the potential to unwind this kind of perfect situation that we're in, right? Or seemingly in. Stocks are just going up every day. Things look really, really good. That is the perfect time where the market loves to play gotcha, where, when everything looks like it's going to fall out of the skies, that a lot of times is the best time to buy stocks and buy risk assets like Bitcoin and things like that. We see the opposite effect. Be very careful that now that everyone, at least in the market sense, in the VIX, does not see a big move coming, that to me suggests we got to be careful. Because if everybody sees, the markets, we're good now, everything's all, storm has calmed, there's potential for the market to play gotcha, or, just to, it's all about expectations. When everybody expects things to be okay, the market has a great ability to swing the other direction. So perhaps the things that I see that could flare up would be the dollar breaking out here could cause a little bit of strife in the indices, could cause a little minor pullback. Oil prices jumping, if they were to be up a couple percent in the next few days, or a lot more than that, if you were to get anything like that, that could disrupt the inflation story, spook markets again. So we have to be looking for these things. We want to be, something we want to watch for. A recession is imminent. It's only a matter of time. True, but let me tell you the biggest warning about calling for a recession. The economy has no limits to how much it can grow, especially if new technologies implemented into the economy improve efficiency. Let's say the economy is growing like this. With the power of the internet, the thing can go like this. And then, maybe we go like this with AI. And the thing is, right, with saying there's a recession coming, and I'm not picking on you 24/7. I'm just the user that said that. The thing is, there is always going to be a recession eventually. Eventually, you will get a contraction in GDP. But today, we did not see evidence of that. In fact, if we look at the U.S. economic heat map recently, we're looking like we are upbeat in many fashions compared to expectations. This is not yet updated, but will be shortly updated. It's on an hourly timer to go grab the fresh data here for GDP statistics. So that will come out soon. But the thing I wanted to show you here is that most of our indicators are actually quite strong. ADP came in, beat expectations this morning. So here's the thing. Just the economy is not mean reverting. So what I mean by that is that maybe over super long terms, maybe, but economies don't ever have to contract. They don't have to contract on any sort of are there some long-term cycles that tend to happen around every 10, 15 years? Yes. But I would argue that the economy can keep growing as long as it wants to. At some point, yes, it will enter a recession. That is guaranteed. So if you keep saying, yeah, oh, we're going to enter a recession, eventually you'll be right. But how much of the boom are you going to miss when the boom can go on for another 10 years from now? Like, we could theoretically, this is hard to like wrap our minds around, but the economy could continue to grow very strong in the US for 10 years from now. Do I think that you're seeing some red flags, like companies getting valued astronomically? You know, yes. We're also running at a wartime deficit in a peacetime in the US national debt. That's seriously concerning. But there's always something to worry about. There's always something to worry about in markets. There's never is the coast actually clear when it comes to financial markets. There's always something to worry about. And so to me, what I see is the biggest companies of the world are growing like weeds right now. Amazon, Nvidia, Netflix, Google, these companies are killing it. And they're growing at such a rapid pace that, to me, dips on those stocks, I don't like to buy them at their all-time highs. I'm not saying, I'm definitely not saying, I go out and buy things at the all-time highs with high leverage. It's absolutely not what I'm saying. I'm an advocate for, waiting conservatively for pullbacks, entering with small size, some level of diversification in what you're doing. Like I said, I'm not like a YouTuber that's just pumping a Palantir stock every day. That's not what I do, right? I'm very, very much more conservative than that in my approach in markets. But the reason I bring this up is because it's a trap that a lot of social media sells to us, right? Which is the market's going to crash. Don't be caught on the side of the crash. But if you play that game, most of the time you're going to be wrong and you're going to miss out on market rallies. Most of the time. It is so hard to call market downturns for one singular reason. Stocks tend to go up. Why? Because economies tend to grow. Over time, populations go up. Over time, technologies advance. Over time, businesses get stronger. Don't let social media scare you into thinking that everything is doom and gloom and there's nothing good out there. Now, don't let social media do the other. There's perma bears and there's perma bulls on social media. Do not be a victim of either one. You can get destroyed by following too closely a perma bull or a perma bear. What do I mean by that? Perma bulls are going to tell you every single day, Palantir, is going to go to $400 a share and SoFi and all these things. And they're going to pump those things right off a cliff. They always do, right? They always are the most bullish right before the big sell-off. And in those types of things, Bitcoin, if you're all in on Bitcoin, if you're all in on Dogecoin, those things can collapse and never give you your money back. If you're buying the SPY and you hold it long enough, historically, there has never been a time where you didn't recover your funds and make a profit. Never. Unless you bought yesterday or the day before, you have never been in a trade, if you had held it until now, that has not become a profitable position on the S&P 500 if you're not using leverage. Okay? So, but you can get destroyed in altcoins. You can get destroyed in individual stocks. You can get destroyed in cryptocurrencies. You can get, like, the point that I'm trying to make here, perma bulls are just as bad as perma bears. People who only ever are bullish and super optimistic and idealistic about markets are dangerous. You do need to be aware of the risks and be aware of what it means to be diversified. You never know for certain, so you should have some level of diversification in what you're doing. But also run far away from perma bears. You know why? Perma bears, in my opinion, are the bigger bad guys, because perma bears know exactly what they're doing. They know how to prey on human emotions and get way more clicks, because perma bears, I'm not naming names here, but you guys know who we're talking about, right? The social media accounts are always like, doom and gloom, stock market's going to crash, Bitcoin's going to crash, gold is going to go to 1 million, right? Those accounts, where you have to be careful with that, is that there is a place to be cautious in markets, and there's times to be cash heavy. There's times to hold off on buying risk assets. But there is a very dangerous potential of missing a simple truth in markets. Economies tend to grow over time. Stocks tend to go up over time. And so if you are convinced constantly that the market is going to enter a recession, that we're going to crash, there is more money to be lost missing out on bull markets than there is to be money made trying to short markets. In my personal experience, and I'm paraphrasing another very common quote, and so in trading land, maybe you guys know it better than I do, but there's something that goes along those lines. There's like more money to be lost trying to, short or trying to time the market in terms of like, I'm only gonna, I'm gonna buy the market if it goes down by 60%. If you had done that in the last 20 years, you missed everything. You missed all of the great rallies, the innovation, the massive technological advances, right? Be careful. What about leverage ETFs? You get blown to pieces in leveraged ETFs if you are on the wrong side of it. They can be a great trading tool, but if you are trading something like TQQQ, right? What the people who trade this don't, sometimes people don't understand. TQQQ leverages it, triple X leverages the Qs, the NASDAQ. If the NASDAQ were to go into a period of 3 or 4 years where it's not hitting new all-time highs, which is very possible that we do that, if that were to occur, TQQQ would experience sizable losses compared to the index, massive, because your extra gain is also your extra loss. And you'd be paying significantly for that leverage. Leverage is not free in markets. Borrowing someone else's money is never free. So when you're trading a triple X leverage, or you're on a CFD Forex brokerage and you're trading with leverage, you're always paying something to access someone else's money. Money is never free to gain access to. So when you are talking about leverage funds or CFD platforms where you're holding positions with high leverage, you're borrowing money. So when you're borrowing money, there's a cost to that. It may occur in the form of overnight holding fees, commissions, spreads, but holding other people's money is never free. And so TQQQ is not a money glitch where you can just triple X leverage and make way more than the NASDAQ over time, because you can do that if you're right about the move. But if you're wrong, you're going to pay a ton in the fees that are associated with holding those funds. And if the market goes down, you're going to get destroyed, right? Because you're going to triple X lose what the NASDAQ losses. And the NASDAQ can go down 50%. So you could blow up, is what I'm saying. I'm not trying to be a naysayer. I'm not trying to bum you out. I'm trying to say, don't look for shortcuts. Don't look for cheat codes in markets. They don't exist. There's too many smart people looking at markets to find hidden secret glitches. And if you do find it, it is possible to find it, right? But the people who are finding them are like PhD floors full of computer science geniuses who are arbitraging, the markets and finding those. It exists, but the idea that you and I, just as like common retail traders, are going to find it and exploit something in the markets before the brilliant teams on Wall Street with, just the smartest people on planet Earth carving out edges every day is very unlikely. But the good news is it's not impossible for us retail traders. We are more nimble. Our risk tolerance can be higher, and that can keep us in moves when the market moves lower. But keep in mind the simple truths. Some simple truths that I adhere to in my trading. Currencies tend to move sideways over the long term. So I'm typically more of a mean reversion over the longer term trader. Pound dollar has moved sideways for, 20 years. Right? Up, down, up, down, up, down, up, down. Right? So, and look at Euro Pound. I was looking at this yesterday. I was doing a video on this. Look at the monthly chart for Euro Pound. You see how mean reverting this chart is? We're in the same place right now in Euro Pound as we were in 2008. And if we go back further, believe it or not, I had another chart that went back further. Let me see if I can. Yeah, here we go. We're in the same level as we were in 1996, the year I was born, right? 1996. So currencies over the very long term tend to move sideways. What about gold? Gold tends to move up over long periods of time. Doesn't mean it can't have a downtrend for the next 6 months. We could move down by 25% in the price of gold. But over the long term, it tends to move up. What about the VIX? It tends to spike and drop, spike and drop, spike and drop. Like, this stuff doesn't have to be that hard. People make it harder than it is. They try and put huge leverage and huge size, and they blow up because they can't accept some of the simple truths of markets. Some of the simple truths of markets are keep your position size small because we never know with certainty what's going to happen. Risk assets, economies, or I'm sorry, not risk assets, but economies and stock markets over very long stretches of time tend to go up. If you are a crypto believer, this is speculation, but so far crypto has a history of going up over long periods of time, but this is not something nearly as reliable or consistent, in my opinion, as gold or the stock market. It's a similar idea, but it's a speculative one because it doesn't have a 500,000 year track record like gold does. That's overstatement by a long shot, but you get my point. There's some simple truths of markets. People have a tendency to mess them up because they get down on the 5-minute chart with a ton of leverage and think they can call every single move. That's how people blow up their money. Simple truths, keep it simple. Okay. I hope you guys enjoyed my rant. I just want to reiterate, the EdgeFinder sale is ending. It's currently 45% off. It is the biggest discount that we do all year long. If you want to track fundamentals, if you want to start trading the same way or a similar way that myself and Marco and the people that come on these streams, if you want to trade similarly, having the right tools is critical. I can confidently say every single day, and I'm very proud about this, sometimes people sell things and you can tell that they are selling them because they just want to make money. And I do want to make money, don't get me wrong. We sell a software product that I think is worth every penny, but that's the part that I want to reiterate. When I come on here and I sell the EdgeFinder, I'm selling something that I truly believe in and that I truly think every trader who wants to be a better fundamentalist should have. It breaks down the barriers. And this is not, this has been a team effort for us to build, and it's been a community effort for us to build because we've taken so much feedback and built the tools that people felt the biggest struggle with when trying to accomplish bringing fundamental analysis into their trading. Don't miss it. It's our biggest discount of the year. The EdgeFinder is 45% off. And the last thing I'll say about this is that I mentioned this earlier, but if you need to split it up into 3 payments, we can also do that so that you don't miss the sale before it ends. Send us a message for details. Up next, we have Marco from Marco's Trading Journey taking over the stream for a little bit to talk setups that he's watching now. Sorry for the rant. I meant to do more charts, but we had a good conversation and I had to keep it going. We had some good questions in the audience, and that drove me to ramble for a little bit. So apologies. Marco will probably do a better job than I did at flipping through some charts for you guys. Okay, up next we got Marco. Stay tuned, guys.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So I hope everyone is doing well. This week is quite busy. We're getting a lot of news and a lot of data coming out. I think the most important thing this week is the Fed meeting. Okay, so I'm gonna do a brief introduction, then I'm gonna tell you what I have on the watch list, and along the way I have the comment section open on the side. So if you guys have any chart requests, any psychology questions, risk management, strategy questions, make sure you put it in the chat. I will be going through requests. Okay. So if we take a look, what I like to do, I like to look at Forex Factory, but also the built-in, these little bubbles on TradingView, the news bubbles, they work pretty well, okay? So I am looking at the Fed press conference and the Fed interest rate decision. So that is in the spotlight for today. Everyone is wondering, we have 2 rate cuts priced in. We have 2 rate cuts kind of scheduled for 2025, or the market expects 2 rate cuts. And pretty much the rate cuts from the Fed impact, I would say, every single market, especially the markets that are connected to the US dollar. And pretty much everything is quoted in the US dollar. So we're going to see, will they cut rates? Will they keep the rates the same in 25? Or maybe inflation goes higher and they need to hike rates? I think that is the least likely option. What I actually think is they won't do 2 rate cuts. I think they're going to do maybe 1 rate cut, or maybe keep the rate the same. So I know we have 2 rate cuts priced in, but I believe the US is getting good jobs data, so good employment data. The US is doing well in terms of GDP growth and those numbers. Inflation is a little bit sticky. It's a little bit sticky, and tariffs are expected to hit the markets pretty soon. We have the 1st of August as a sort of a tariff deadline. So once the full tariffs are implemented, we could see some inflation in the markets. So because of those 3 things, and the big beautiful bill from Trump, the big beautiful bill could be inflationary. There could be a lot of government spending. The US debt could drastically increase, and that leads to more inflation. So basically, the Fed has all of that in mind, and currently they don't see a need to cut rates. I personally don't see a need to cut rates, because if you're getting good employment data so far, that could deteriorate. But if so far you're getting good employment data and the GDP is okay, but inflation is a bit sticky, and you're kind of expecting tariffs and the big beautiful bill to hit the markets in the upcoming months, you don't really want to cut rates. It doesn't make a lot of sense to cut rates. That's what I personally think right now. That may change. So I'm thinking that the dollar could, in the short term, gain some value. If we keep getting good employment data and the US economy keeps doing well, and the inflation remains kind of sticky, so not extremely high, but kind of sticky, not going lower, I think the DXY could go higher. And that is exactly what is happening right now. I mean, the DXY is pushing to the upside with quite a lot of momentum, right? So I'm considering currency pairs such as the USD CAD. These are all or signals from the EdgeFinder. USD CAD, I'm looking for potential buy setups. I'm going to mention those a bit later. And the pound dollar, I'm looking for potential sell setups. Pound dollar is a pretty nice sell signal on the EdgeFinder, while the USD CAD, USD is, I would say, strong right now. You're getting good economic data out of the US, and the Canadian dollar is a little bit weak in terms of fundamental data. And as I mentioned, the DXY, I expect short term the DXY to gain more value, but long term to, yes, continue dropping, because I do think interest rate cuts will eventually come, maybe in 26. Okay, so I believe for the DXY, short term we appreciate, but then long term we could continue with the overall massive downtrend. So that is my game plan. That is what I'm looking at in terms of the DXY. Let me check on the comments. We have quite a lot of comments. Okay, so let's see. FOMC. Hey Marco. Hey FX Bashi. Gold. Okay. Silver, euro dollar, gold and silver. Sure, we can do gold and silver. No worries. So I still have a trade running on silver. Not looking the best right now. So I have trailed my stop loss into profit, but we are approaching my stop loss level. So I got in on the 24th of June. Okay. and price moved up. I trailed my stop loss first underneath these lows, and then I moved it underneath this swing low right here. So if the trade does take me out, it will be a nice, I would say an okay winner, nothing to write home about, but still I'll be happy to take a winner. It just won't be what I thought it would be, because at one point this was running around 3.3 R. But that is trading. You never know for certain what's going to happen. So it looks like I will get taken out with my trailing stop loss. My game plan was to keep trailing this. If it does continue up, to just keep moving the stop loss underneath the swing lows. The reasons why I liked silver, there was a bullish reading on the EdgeFinder on the, I believe it was on the 24th of June. So bullish reading on the EdgeFinder. Nice uptrend on the daily chart. So we had a breakout on the daily out of this flat range. We broke higher, and also gold already had a very big push to the upside in the last, I would say, 12 months, even more, massive push up. Silver, in my opinion, was lagging behind. So silver was lagging behind gold. So I was playing the catch-up trade for silver to catch up to gold. I'm sorry for my trading view. On some days it's a bit slow. I don't know if it's a MacBook issue or just trading view issue. But yeah, I was counting on silver to catch up to gold. We started to catch up, but looks like it's retracing now a little bit. Currently, why do I think it's going lower? Fundamentally, well, it could be going lower because, just a second. So it could be going lower because we're getting some tariff resolutions. Okay, so we're getting some trade deals. Tariffs maybe won't be as big as people initially expected. They may be a bit lower. And all of that uncertainty around the tariffs, all of that uncertainty around Trump has started to calm down. And also what doesn't help is that the dollar is exploding in value right now. So we had a pretty big push in the last few days. If you look from the bottom, we went up 2.35%. So that is pretty big. And if the dollar goes up, usually when the dollar appreciates, silver and gold actually lose value against the dollar. Okay, so we have multiple factors impacting silver right now, which makes silver go down a little bit. Personally, overall, I'm still bullish. If I get taken out of this position, I won't look for a re-entry, so I will not look for another buy setup. I will be more patient, and I will wait for the markets to develop a bit. I'll wait for a fundamental bullish signal from the EdgeFinder, and I'll wait for some possible macro to also to maybe spike some uncertainty, and then gold and silver could catch a bit of a bid. Okay, so on the long term, I'm bullish, but I'm not looking for a re-entry. I would not re-enter this trade if I get taken out. Gold, similar story. Okay, so for gold, I have a similar opinion. I think the daily chart is still in a massive uptrend. Very strong uptrend right here. Getting this trend line is getting respected. Okay, but again, the macroeconomics are not so bullish for the metals, for gold and silver right now, because the uncertainty is going away. There was massive uncertainty when Trump came into office in 25. Trump made some very bold claims, and he mentioned a lot of tariffs, a lot of potential tariffs. But now, as the trade deals keep coming in, you could see a risk, more of a risk-on environment, right? So gold and silver, they like a risk-off environment. I would say my forecast is the opposite of what it is on the DXY. So we could get a bit of a retrace. But overall, I do think the overall uptrend on the daily chart will continue, and that's the same opinion that I have on silver. So let's see. So a little bit of a bearish move, and then the price could continue up, right? And I may try to look for buy setups to try to get in on some buy setups on this move up. You know, after we get a pullback, if the EdgeFinder gives me a bullish reading, if you get some macroeconomics that again spike uncertainty, you could see silver go up even more. So that's my opinion on gold and silver. Let's see the comments. Okay, euro dollar, sure. SPX, okay. What broker do I use? I use IC Markets personally. Which pairs do you currently want to take a trade on? Okay, so that's pretty much what I have on the watch list here. So I'm in silver, I'm in DAX, I'm in the DAX. So I'm in a buy trade on the DAX. I'm looking for buy setups on the NASDAQ, looking for buy setups on USD CAD, and I'm looking for potential sell setups on the pound and US dollar. I just had an alert. Let's see. So it's okay, it's GBP USD. So yeah, looks like these pairs are moving quite nicely. Let me just delete these old alerts. Looking to sell the pound dollar, it's definitely crushing lower right now. And the EdgeFinder is giving a pretty nice bearish signal. So this has definitely also broken structure, in my opinion. On the daily chart, we have broken this trend line, sort of broken it, retested it, and then continued moving lower. So now I'm interested in sell setups. I saw that you guys want to see the euro dollar. Euro dollar, I was actually looking for buy setups. So during this time, I was looking for buy setups because the EdgeFinder was bullish and the euro was getting some very good fundamental data. Also, there was talk of a trade deal, which is like for macroeconomics, that was pretty bullish for the DAX and for the euro possibly. So I was looking to get in on some buy setups on the euro dollar, but then euro dollar lost the bullish reading on the EdgeFinder. So I remained patient. We went up a little bit, and then we now started to melt lower with this massive strength coming in for the dollar. So looks like it's a good thing that I followed the plan. It looks like it's a good thing I stayed out of a buy setup here. Right now, again, short term, I'm bearish. I do think the dollar is going to gain more value in the short term, but long term, we could see the euro go up, right? So because we had this massive uptrend, yeah, I would say I'm pretty sure the probabilities for the short term are more dollar strength. Okay, more dollar strength. Let me just check on the USD JPY. Let's see. Okay, so I have an alert set for possible buy setups on UJ, but again, both the dollar right now is pretty strong and the yen is also kind of strong from my personal analysis. So I don't really want to take a trade on USD yen, because if both currencies are strong, there's really no sense in executing a setup because your edge is very small. The best setups are when, let's say, the US dollar is very strong, but the yen is very fundamentally weak. Then you get a nice uptrend, right? So then you get something like this. So let's see the questions. Euro GBP, Pound Aussie, DXY. I'm currently long or not long. I think it's gonna go up more. Don't commissions eat up your swing trades? No, not really. No cut. Okay, so there's not going to be a cut today. I think there's like a 90-something% chance that there's not going to be a cut, an interest rate cut today. Maybe in September. You know, that is what the probabilities are telling us. So let me finish my watch list, and then we can do Euro GBP and we can do the Pound Aussie. So for the DAX, I'm in a buy setup. I went long on the bottom of the range right here. So I went long in this area. I thought it was a nice area of support. And also, I liked the overall daily uptrend. I liked the fundamental data coming out of Europe. And I was counting on I was expecting on a trade deal between the EU and the US. So the trade deal happened, but from what I can see, investors and traders are not really happy with the 15% tariff. They actually think it's kind of bearish for the markets. So you had this massive red candle on Monday when we opened, and you had a pretty significant bearish move on the euro, right? If we go back to the euro, this is again on Monday. Yeah. So this was Monday, red day for the euro and for the DAX. The DAX has recently recovered. I do still think this is a good play because fundamental data is still coming out bullish. The trade deal still eliminates some uncertainty. So even if 15% tariffs don't sound great, I do still think removing that uncertainty helps the DAX. Okay, and again on the daily chart, pretty big uptrend. So I'm still liking this position. I'm trailing my stop loss. If the price does decide to continue higher, I will just keep moving my stop loss underneath the swing lows. Okay, so that is the game plan for the DAX. NASDAQ, as I mentioned, I'm looking for buy setups. So let me show you. NASDAQ, I'm really bullish on. I'm really bullish on the NASDAQ. Fundamental data out of the United States is coming out bullish. EdgeFinder is giving a bullish reading. Artificial intelligence is in the news for 25 and will be in the news for 26. Again, the companies that benefit most from artificial intelligence, in my opinion, are technology companies, and the NASDAQ is comprised of top 100 technology companies: Microsoft, Apple, Amazon, Tesla, companies like that. Okay, so I think those companies will have the most success in 25 and 26. So I want to go long on the NASDAQ. I think that's where I have the biggest edge and the biggest profit potential. One problem though is I don't want to go long here at this level. I think this is a all-time high. Okay, I think this level is kind of too extended. So for what is it now, 36 days on the daily chart, we haven't touched the 20 MA for 37 days. So I would say that is pretty overextended and a pullback could happen soon. I'm looking at this level of support, or maybe this one a bit higher, which would be a bit of a more of an aggressive entry. So I would prefer to see the price go all the way to this level where I have my alert, but let's actually move this a bit higher. Maybe I can get in on an initial position, on an initial buy position at this level of support. So I will consider that. So the summary is, I'm definitely very bullish on the NASDAQ. I think all of the things that I'm watching are pointing for a higher NASDAQ. I just think it's a little bit overextended, and I would prefer to see a pullback first. The reason is, if I'm getting in right here, my stop loss needs to be pretty big to be at a more of a significant level of support. But if I wait a bit, let's say to here, to get in, I can have a tight stop loss, and I would say the profit potential is higher, much, much higher. So in my opinion, it's always better to wait for a bit of a pullback, get in at a better price, than to try and catch the price, because yes, you will miss, I would say you will miss a lot of setups in the case of the NASDAQ, because I've been trying to catch a buy setup in this whole area. So you will miss out on some setups, but it feels much better if you get in at a better price. You have a better stop loss placement, you have a better profit potential, and it just kind of is better for my psychology as well. So I don't really want to hunt for entries. I kind of want the price to come to my predetermined specific levels. I think that's better. Okay, so let's see. So we had GBP Aussie, Euro GBP was first, and then GBP Aussie, Euro GBP. Let's see the daily. Kind of definitely was moving up. Now a lot of selling pressure. Let me check on the EdgeFinder. Euro GBP. Let's see if we're getting a signal, bullish signal. Okay, I'm not bullish on this one. So we're getting a bullish fundamental signal, bullish signal from the EdgeFinder. But personally, I see too much selling pressure right here. This is a lot of selling pressure. Looks like the euro has lost a lot of strength. Okay. So I personally would not like to buy into this sell pressure. I would be neutral right now because the chart is looking a bit bearish in the short term, while the signal, the EdgeFinder signal, is bullish. So that doesn't really make for a good buy trade, in my opinion. So I would be patient. I would expect possibly a bit more downside or a bit of a range bound market like this. And eventually we could continue higher. But right now I would not, I personally don't have a good, let's say, view on this currency pair to take a trade. So for the pound Aussie, let's check that one. Let me check the EdgeFinder as well. Let's see. GBP AUD. Bearish. Okay, we're getting a bearish reading on the pound Aussie. Well, I would of course be looking to sell. I would be looking to go in line with the fundamentals and the macro. So, and the sentiment and the institutional money, which is bearish. The overall signal is bearish. So I would look for a key breakout from these lows. So I would look for a drop like this. Okay, until I get a significant drop and until I get a significant bearish move, I would not be looking for a trade. So I think current technical analysis is telling me this is a bit flat. This is a bit flat and range bound. And I would expect, in terms of technical analysis, for this to continue kind of ranging around. Okay, so that is what I'm seeing on the pound Aussie. I don't have a clear signal. I would first look for a breakdown or a breakout, a breakout of these lows right here. Then I would consider sell setups. And yeah, I think pound dollar is a better trade. I think if you want to do something with the pound, I think going short on the pound dollar could be a better play because I can see a definite break out of these lows. You know, we definitely broke lower. You could also make a case for a bit of a inverse cup and handle, or you could even make a case for a left shoulder, head, right shoulder. So those are all bearish patterns. I think this is a nice pair to sell. And as I mentioned, USD CAD, because I also have them on the watch list. So just to finish that up, USD CAD, I would consider buy setups. EdgeFinder is telling me that the fundamental signal is bullish. Dollar is strong. CAD is weak. So if we go up a bit more, I may look for an entry on the 1 hour chart. Let me see how the 1 hour chart looks. Looks interesting. So I may even consider getting in on a buy setup here. Yeah, possibly. So again, what I'm looking at for entries, I'm looking at the 1 hour for flags, break and retests, reversal entries, liquidity sweep entries. So just some very simple entry patterns but on the 1 hour chart. So here I would look for a break and a retest. So possibly a retest of this high. I will set an alert and keep monitoring the situation. Let's go back to the daily. I would prefer to get a close of the daily candle though. You know, because the daily candle could still print a large wick. So the daily candle could still print a large wick. In that case, I would be more patient because we would not get a convincing breakout out of this level of resistance. So it all comes down to the latest daily candle. If we close with a nice clean close, if we don't leave a big wick, I think that is a signal of strength, and I will be considering buy setups right there. And as I mentioned, pound dollar is an interesting sell setup. So let me see for that one. I like the daily chart right now. Let me zoom in on the 1 hour. Let's see. What can we get? Okay, we had a nice impulse lower. So a nice push lower. I may look for like a flag entry here, or maybe like a pullback, break of the low, retest. So I will consider those entries. That would be high probability in my opinion. So yeah, I like this push on the 1 hour chart and I like the daily chart. Let me see how we are closing right now with the daily candle. It does still depend on the daily candle. So the daily candle can still print a large wick. We still have 7 hours to go. I think waiting for the Fed meeting for today could be a smart thing for USD CAD and for the pound dollar. You know, we could get some very bearish USD news from the Fed. We could get an announcement of interest rate cuts. You never know; it could happen, but they could mention that they are heavily considering to cut on the next meeting. That would be bearish for the dollar. That would definitely, in my opinion, make this chart go up. And the whole trade idea that I have going short on the pound dollar would no longer be as good or as high probability. So let's see some comments. What's your indicator name that shows market structure? I'm going to show you that right now. GT recent high low. That's the indicator I use. It just paints the swing high, the swing low, and the recent breaks of those swing highs and swing lows. Okay, so it's a cool indicator. It's a cool indicator. So pound US dollar, yes. Pound Aussie we did. Yeah. So just to sum it up, I'm nearing the end of my segment for the stream. So to sum it up, silver looks like I'll most likely get taken out of my position. The DAX, I'm just trailing my position. Hopefully it appreciates more. The NASDAQ, I'm looking for a pullback. Okay, on the NASDAQ, I'm looking for a pullback, but I'm heavily looking for buy setups. Now for the USD CAD and the pound Aussie, I like dollar CAD to buy. I like the pound Aussie to sell, but I'm most likely going to wait to see what is going to happen with the Fed. What is going to happen with the Fed meeting? We're probably not going to have a lot of volatile price action before the Fed. Usually markets kind of quiet down before a Fed meeting. So if everything is still the same in that Fed meeting as it was, meaning they're not going to mention anything about potential rate cuts, they're not going to mention anything about that the economy is not doing well and that they want to, let's say, heavily cut interest rates. So basically, if the speech for today from Powell remains the same as it was in the last Fed meeting, then both of these trades are pretty good, because in that case, I'm still expecting some short-term dollar strength. Okay, so that is going to be my game plan. Now you know what I'm looking for. Thank you, AACA, for the feedback. Gold. So just the last one. Let's do gold again. I know you guys really like to see gold. So gold, we're getting trade deals. Tariffs may be lower than expected. August 1st is approaching. Gold, I don't think it has a major bullish case in the short term. Also, the dollar is gaining some value, right? So the dollar is gaining some value. All of those things are making gold lose some value. So I'm not short-term bullish. Long-term, I'm definitely bullish because of the uptrend. But short-term, I'm being patient. And if there is a development in terms of macroeconomics, in terms of a major risk-off environment, I will then look for buy setups on gold. At this point, I am staying away from gold. And that would be about it. Thank you guys very much for watching. Thank you, A1, for the opportunity to do this live stream. See you guys in the next week. And yeah, that's about it. See you. Goodbye.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weeble. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weeble is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How's everyone doing? I hope you're all enjoying your Wednesdays. I hope you're all prepared. We do have the Fed meeting today. I think Marco was just talking about the Fed meeting, so I may as well put my view in there while the topic is still fresh. So I'm fully expecting a hold. I think everyone's expecting a hold for this meeting. I would be, and the markets will be very, very surprised if we got any rate decision at all. I think 25 basis point cut obviously would have a bearish impact, but yeah, I would heavily doubt that. I'm not expecting anything too dovish. However, if we did get some signals of a rate cut in September, I wouldn't be that shocked. But yeah, we'll see. I think it's going to be a case of just wait and see what happens. The data has been relatively strong for the US. So let's just take a quick look at the heat map on the EdgeFinder so we can see, or we can just put into perspective really what's going on. Wow, reading of 69. It's that magical number. Last time I checked, I think the dollar was slightly lower. I think it was hanging around 50 or 55. So it's good to see 69. So GDP, increase in GDP. Was at negative 0.5 and it came out at 3. We've had manufacturing PMIs come out positive. Services PMIs pretty much on the dot. Well, exactly on the dot, came out at forecast. So it is an increase on previous. Retail sales also increased. CPI has also increased from previous. So overall, I'm not going to read all of it, but you can see it. Overall, we're doing quite well. Jolts did take a hit yesterday, it was. However, you know, was it that bad? Not really. The dollar didn't really have any reaction off the back of a poor jolts. ADP came out today as well, also overshooting actually from negative 33, came out at 104, also beating forecast quite a lot. Forecast sitting at 77. So what would be the argument for the Fed to cut rates? Well, inflation is slowing, or it's cooling slowly. So inflation is definitely not spiking. It's not like rocketing to the upside, let's say that. So there is an argument very loosely that yes, they could be a little bit of a dovish, but again, I just don't really see it happening. So I am still sort of standing with Bank of America. So if anyone was here yesterday, I just realized I've not got the chat open. I do apologize. You know what? I'll pull it up again. Just bear with me for a second while I find the thingy, the picture. Here. So Bank of America said on the 23rd of July that they're not going to cut rates again. I'm not going to read all of this, but just to read the last bit here. Mark's moved on as they increasingly discount headlines until they become indisputable facts. But these developments go in line with our view that the US economy will avoid a recession and the Fed will not cut this year. Then after that, I think it was one or two days after, they followed up and said that they have higher conviction in that Fed call. So Bank of America, just like me, are sitting quite nicely on the more bullish side of the dollar. And again, the EdgeFinder is also backing that idea up. And the weekly time frame is rocketing, or the dollar's rocketing, I should probably phrase it like that. We are heading into the most sort of recent highs here. I don't think that's going to be much trouble breaking, especially if we don't get any dovish tone from Powell today, which I don't think we will. Okay, let me just see what's going on here. FX James. Yeah, I'm getting rid of all of that branding stuff. I don't want to be known by that anymore. I just want to be called James. That's my name. Bashi, I've not seen you in a while. How you doing, my friend? Wait, if it's not FX James, it's a mirage of the ball out. I'm not sure what you mean by that. Learning British/Scottish slang. I don't think I use that much slang. Or maybe I do, I just don't realize. Anyway, so pound dollar, I'm still very salty about this one. I mentioned it yesterday. I did have a sell limit placed at, well, just on this orange line here. Price did come up, create this lower high like I was expecting, but nothing happened. I didn't get tagged in. So I'm just sat watching with a tear in my eye as pound dollar just melts down, which is really sad. The dollar yen, this position, I'm not in this, by the way. If I'm in a position, I will let you know. So dollar yen, the reason this is marked up is because this was a position or a call by Nomura Research. I showed the report yesterday, but I'm not going to bother showing it again, but I can do if anyone wants me to. But essentially, they were saying that they're very optimistic in the dollar yen short side. And this was more betting on a dovish Fed and also the tariff developments within Japan benefiting the yen. And then in turn, or on the back of that, benefiting the data coming out of Japan. And then in turn, allowing the Bank of Japan some room to start hiking rates and continue their path to normalization, which then in turn would likely cause a carry trade or a continuation of the carry trade unwind. So far, it's not working out for them, but we will see. Maybe the Fed could come out super dovish, and you know, maybe I was just on or maybe I was should have been in their idea, is what I'm trying to say. The pound remains a really nice short idea here. So we pull up again the trusty EdgeFinder top setups. Yeah, here we can see the pound is getting a very bearish reading. Aussie dollars there as well, which is nice. So we've got pound dollar, pound New Zealand, pound Swiss, pound yen. And that actually leads me on to pound yen. So pound yen was another one I was looking at to sort of go in line with this dollar yen short I just discussed. But I think with the dollar strength that's coming into the market, I'm not sure I'd really want to be short dollar right now. So I think pound yen could also be a nice play here. Prices at a very nice technical level with this, whatever you want to call it, resistance, previous highs, sort of double, triple top, whatever, it's cool. As well as obviously the pound being very bearish. Trade deal in Japan, so it could be quite a nice play. I'm just not willing to take it just yet. I have a feeling that we might see a little bit of consolidation here. The price action is not overwhelming just yet, and obviously on pound yen you do have to pay swaps to sell, so it's a negative swap trade. So I don't want to be just sat through consolidation and paying swaps at the same time. So I'm quite happy to just sit, wait, and once we get a break of these lows, maybe I could go in short. Maybe if we come back into these highs, I could then go short and get a slightly better price. Either way, I'm sort of just waiting for pound yen. Aussie yen is not. Oh, sorry, Aussie yen is on the EdgeFinder as bearish, but it's only got a -5 reading, so it's nothing overwhelming. But I am watching. So the daily moving averages are still technically bearish, but again, it's not something I'd really want to sell into just yet. So I probably won't take Aussie yen. It's not a pair I really pay much attention to at all, but it is on the watch list just in case something interesting happens. NASDAQ, again, I heard Marco talk about the NASDAQ, just saying it's slightly too high to buy, and I completely agree with him. I think that this market could be a very nice long position if we can come back into these all-time high or the previous all-time highs. Obviously, we've had our break here. We see a retest and then we enter long, looking for the continuation to the upside. I think that would be best case scenario. Whether we're going to get that, I don't know. If we get a hawkish Fed tonight, maybe that could be a catalyst for the NASDAQ to cool down a little bit, come back into these previous highs, and then we could look to get into some longs. US 30 has a similar idea, although actually a little bit of a different technical setup here. So as I mentioned yesterday, the NASDAQ, the Dow, DAX, I think the FTSE as well, a lot of the indices markets have obviously had the crash here that we saw from tariffs. They've had the recovery, but they've also gone up to create new all-time highs, and they've just rocketed since then. The Dow hasn't. The Dow is really lagging behind. So my theory here is that if we can see some sort of pullback in the Dow, that would be a nice buy low situation, and look for the Dow to catch up, or have at least somewhat catch up to its counterparts. So that's the rundown. Let me again just quickly check the chat. Gold, yeah, we can have a look at gold for sure. GGO waiting for support breakout. Yeah, it does look like that, OT. James, Swiss franc weakness could push Swiss yen bearish. It definitely could. If we do get, actually, let's take a look at Swiss yen, because I was quite a bear. In fact, I was very bearish Swiss yen at the start of the year. Obviously, I was proven wrong with that idea. So let me get rid of that because I'm not really looking to go long anymore. So yeah, if we do end up getting some signals by the Bank of Japan, is it tomorrow they have their meeting? Let me just double check. They do. So tomorrow we have Bank of Japan interest rate expected to stay the same. I'd be very, very surprised if they did anything but hold. Then we've got the monetary policy statement, and this is where we're going to get the forward guidance. So if it's even remotely hawkish or even slightly hints at the possibility of a rate hike and Bank of Japan continuing that path to normalization, yep, Swiss yen could be back in play for that short idea that I initially had at the start of this year. I got caught really on the wrong side of this, actually. When I say really on the wrong side, not in terms of like a huge loss, it was more just I called it quite poorly, really. I was shorting sort of around here, and then obviously it just went the opposite way. It just really didn't play ball whatsoever. So that was a bit painful, but it is what it is, you know. So that's kind of it. Oh, gold. Let's have a look at gold. Yeah, so it's not a surprise gold's down today, or gold's down whatsoever. I mean, the dollar is doing very well. There's very little interest in gold from my view. I've been like a broken record on gold. There isn't really any reason for me to buy or sell from my perspective. The Fed is neutral, slightly hawkish in my view. We've got, you know, everything priced in. We had election fears, obviously that's done. We had Russia, Ukraine. That's, you know, what's going on there. Pretty much nothing, or no new developments in the greatest respect. Same thing with the Middle East. So, you know, well, really what's going on? Yes, you've still got central banks accumulating gold, but that's not enough to warrant retail taking speculative longs, in my view, anyway. Shell's holding on to GU until trendline breaks. Short, lovely stuff. I'm a bit jealous of that. Nick should have you as a guest. I think they already had Bashi on as a guest, if that's who you're talking about. Yeah, GU short looks wonderful. Yeah, not happy actually, Shells, if you managed to catch that. And I'm sat here like a what's the right word for that? I don't know. Can't think of a word. James, you mentioned in Discord Ned is bearish. New Zealand dollar. Oh, OT, you in my Discord? Interesting. Yeah, Shells, don't laugh at me. So yeah, same story as the AUD, poor fundamentals, weak positioning, strong downside momentum. Yeah, let me just take a look at the New Zealand dollar. So OT, just for context, the daily analysis I put out is pretty much just based on EdgeFinder readings. It's based on currency strength and market sentiment, and that's about it. It doesn't account really for the larger or the wider economic landscapes. So yeah, let's have a look into the New Zealand dollar quickly. I don't have that much time today. I've got a meeting to get to at 3 on the dot, which is when my segment ends. So I'm gonna have to wrap up pretty much a minute or two before 3. Well, I say 3 my time. Actually, New Zealand dollar is doing quite well in a fundamental view. So the reason I was calling relatively bearish today is because we did have, it's changed now. Let me just double check what it was. We had defensive positioning. So we had volatility and sentiment, equity outflows, defensive sector rotation, mixed earnings, and economic data. So obviously we do generally see a more risk off flow into large news events. And when I say risk off flow, I don't mean gold spikes and all the risk assets dump. I'm not saying that. It's just a more cautious approach in the markets. So when I'm saying large economic events, we have had what? Let me just recap what we actually had today so far. So we've had GDP for Germany, GDP for Europe. We've had ADP for the US. We've had GDP annualized for the US. We've obviously got the Fed tonight, and then leading into the end of the week, or at the end of the week on Friday, we've got NFP, unemployment. I think we've got manufacturing PMIs, average hourly earnings. So yeah, it's a busy week. Anyway, CAD interest rate just released, stayed the same. Okay, so they held rates. Interesting. Oil, I think, is doing quite well, or at least it was last time I checked. Yeah, it is. Yesterday, I was saying that I'd be interested to be a buyer if it broke above this 200, but I just don't think I want to. I just don't think I am really that interested in oil right now. I'm more interested in just trying to buy some dollars. I think we're at a point now where there is potential for the dollar to start coming back towards 110. I'm not saying it is going to 110. I'm just saying start drifting towards 110, especially if we do get the hawkish Fed or even neutral Fed, I think would be relatively supportive. So I think if you are interested in swings and you're willing to take a bit of a risk, I think buying dollars is actually a bit of a sale right now. It has been for the past 4 weeks. Wait, was that right? 1, 2, 3, 4. Yeah, 4 or 5 weeks. The dollar's been on sale in my view, because I just don't see a world where it's going to start dropping below. I'm going to say 94. I think if it broke 94, I'm going to have to reconsider quite a lot in terms of what I've missed. But yeah, I think dollars are quite a good purchase right now in my view. Again, I'm not telling you to actually buy dollars. It's not financial advice. I'm just saying this is my personal opinion. Yeah, OT, that's exactly it. It's more just intraday outlooks, because that's why I put them out every day. It's for that day. I'm not doing the a weekly outlook. That's actually what the weekly market watch is. So if you look in the same analyst updates, you'll see good afternoon elites, and then you'll see the weekly market watch. So that's what they're both for. Okay, right, let's just see. I've been slacking this week. I've not checked what the institution's doing really. So Aussie's getting sold. Gold is still bullish. It's not a surprise. Gold's always bullish on here. Silver, yen is still bullish. Yeah, so this is a sign I'm not really willing to be too involved in the yen just yet. It seems still quite weak, but institutions are adding positions, it seems. Well, actually, sorry, I'm lying. They're not adding positions. They reduced longs, but they reduced more shorts. So still overall long. Net positions 106. Interesting. Okay. Gold still getting bought up. However, because COT is obviously delayed by a week, just makes me a bit cautious that what happened with gold, and this is complete speculation, this is just my sort of conspiracy thought, I guess, not actual analysis based on data. But as we all know, or as we all should know, COT is obviously a week behind. So what we could have seen is obviously buying in gold back into previous highs, and this is the profit taken from last week. So we as retail are seeing that they bought gold when actually this week they're just selling gold. Obviously over a short-term horizon, but yeah, that doesn't convince me in any way to be a buyer of gold just yet. Pound, obviously very short, not a huge surprise. New Zealand dollar is also getting sold. Yeah, long contracts taken away, massive short contracts added on pound as well. Okay. So yeah, that makes me a little bit more confident in being a bear on the pound. Excuse me. So Nasdaq's bullish, Russell's bullish. I don't think Nick's in his Russell trade anymore, is he? I know he was in quite a nice trade, but from what I saw, I think it was taken out on a trailing stop. But yeah, maybe the Russell. Let's take a look at the Russell. I don't trade it, so I have no idea what's really going on there. Is it going to load? There we go. Let's just use CME. Remove drawings. So I guess I guess a very typical pullback could be sort of in. Oops, that's not what I want. A very typical pullback could be in view here. So it'd be a pullback within our fib zone here that would then meet our 200 moving average, and we could maybe look to be buyers there. I basically do what I said on Dow earlier with a sort of a catch-up trade, looking for, first of all, previous all-time highs, and then also a break of those all-time highs. So if you are someone who likes to trail stops and scale into positions, you could look for something like this. And then if we do see the Russell break these highs and retest and continue, might be a good opportunity actually to scale in there for an additional position. That could be a play. But again, I'm not a Russell trader. It's not something that's in my basket really. So do your own analysis before paying too much attention to what I just said. OT, you think it's going to correct to about 100? Dollar's only a corrective move. But why, Lee? What is there to drive the dollar down? DXY to 101. Probably October. I'm not confident. We'll see. But from a fundamental view right now, I just have no reason to be a bear on the dollar. Obviously, that could completely change. We could get weak NFP, or we could get high unemployment. We could get a dovish Fed. Obviously, my outlook can change. But as things stand right now, I just don't see any reason that the dollar is going to continue to. I don't see any reason the dollar would start breaking the previous low. Really, obviously, a pullback, maybe back down to sort of 97. Maybe even, maybe 98, 97 could be reached again just on a pullback, but any further than that would, in my view, warrant some sort of flip back to bearish in data. Don't you think the DXY will drop today? Let's set aside the Fed. What do you mean, Hamza? Why would the dollar drop today if we're not accounting for the Fed? What the heck is wrong with the market today? Akko, we've got the Federal Reserve tonight. So the markets are generally slow when it leads into news events like that, because what we get is forward guidance. So what you need to understand, I'm not saying you don't, this is a general statement. What people need to understand is the markets are forward looking. So when you see buyers in the market, generally it's not because of anything that's happening now, because generally that's already priced in. So what we'll be doing is the markets will just be, obviously ignore the time frames, it's just for visuals. The market will just be ranging, waiting, and then we can see, okay, the Fed might say here, they are dovish or they are hawkish, whatever it may be, and then that can set the tone for the next market movements. So at the moment, the markets are just waiting to see what Powell has to say. No one is really interested in placing trades ahead of Big Daddy Powell. Anything's possible. Absolutely anything's possible. But again, I'm just reluctant to be a bear on the dollar just yet. Again, just for clarity, that can change. I'm not saying that I am a perma bull on the, well, actually I am a perma bull on the dollar, but I'm not saying that it's impossible it can go lower. Of course not. Economic data is too strong across the board. What do you mean it's too strong? Anyway, it is what it is. Okay, I've got roughly 5 minutes left. Just want to say, check dollar yen. Yeah, we can have a look at dollar yen. So since I'm just wrapping up here, I'll pull up the report I was talking about. I showed it yesterday, so I apologize. I think I've repeated myself today quite a lot from yesterday. But nothing's obviously changed that much in a day. So this is a dollar yen position. I'm not in it. This is the stop and the entry are the same as Nomura research. So this is the report they put out. There was one before this, and they basically said they had a conviction of 3 out of 5. They republished basically the same report and said that they've increased their conviction from 3 out of 5 to 4 out of 5. So I was interested, obviously, draw it up and see what's going on. So essentially, the tariffs are pretty much done. Bank of Japan, we believe the likelihood of Bank of Japan October rate hike has risen. So yeah, that's pretty much it. They're also expecting a weaker dollar, which I don't fully agree with, but obviously, again, could come to fruition at some point. So that's the view on dollar yen. I am actually more slightly bullish short term. Long term, absolutely could start dropping further. It wouldn't surprise me if we see sort of 140 get hit again on dollar yen. Oh, OT, yeah, no, I agree. Anything's possible with Trump in office. I think we're over the worst of Trump now, to be honest. I think we've had what do you want to call it? Like a teething period. Like we've got the new president. Well, not new, but the new president for the term, and he was doing what he wanted to do. It shook up the market, it shook up the political landscape a little bit, and now it's kind of done. I think it's done. We could get a tweet tonight. Jerome Powell holds rates. Trump goes on an absolute truth social spree. We need to fire Powell, blah, 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 blah. And then gold spikes because, whatever. True, Ali DXY Mega to 101. He's saying something, and we blinking Cena 89. Yeah, I know. It made me laugh a lot when we saw Trump, or the headline that Trump wanted to fire Powell or was going to fire Powell, because we saw risk assets take quite a nice or quite a strong rally short term, just faded the move, and it just fell back down. Obviously, Trump can't fire Powell. Well, I guess like physically he probably could, but I think that would lead to massive problems. Legally, he can't. Breaking news: Powell raises rates by 200. Did you guys see the when Trump went round I can't remember what the building that the Fed's doing. Trump and Powell walking around, and Trump was just yapping, and Powell was just shaking his head, and then stuck his tongue out later in the meeting or the interview or whatever you want to call it. Powell, you could tell Powell is just sick of Trump. It would be hilarious. It would be so funny if Powell decided to raise the rates by like 1 basis point just to spite Trump. That'd be a legendary move. But anyway, obviously that wouldn't happen, but that would be quite funny. Bashi, we have been through a lot this year. Yeah, it's been fun. It's been eventful, to say the least. Anyway, I'm gonna have to go in a couple of seconds. Let me just make sure I'm not missing anything. Is that what it was, OT? Yeah, I can't remember. I just saw it on an Instagram reel. I can't remember exactly what was going on, or the context behind it. It just made me giggle. Anyway, ladies and gentlemen, I am going to have to shoot off. I've got to get to a meeting, so I apologize leaving you a minute early, but I hope you understand. Guys, have a good one. Stay safe, and I'll speak to you Friday. I think I'm on Friday, so I'll see you all then. Enjoy the rest of your days and weeks.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.